welcome you all to the ETH Money Gurukul Summit. As the name suggests, this event, with the support of the financial gurus present today, will teach us all to invest our income better. Whether saving for higher education, managing one's monthly budget at home, or planning for retirement, financial literacy affects us all. And with the large number of choices being available today for saving, spending, borrowing, and investing, financial decisions are becoming more and more complex. Spread across 12 cities in India, the primary mission of this initiative, that is Money Gurukul, is to enhance the level of financial and economic literacy of individuals, thus promoting professional development and well-being at an organizational level. I would like to thank our partners for helping bring this initiative together. Associate partner, India Infoline; depository partner, NSDL; mutual fund partner, Birla Mutual Fund; exchange partner, BSE IPF; and alliance partner, FIAI. You would also be glad to know that this event is currently trending on Twitter, and you can tweet your experiences while you're here using the hashtag #ETMoneyGurukul. Our conference format today is going to be slightly different from the usual workshops, seminars, or conferences that you've attended. We will be taking all your questions or queries right at the end of all the sessions. We'll be distributing a question slip where you can make a note of all the questions or queries that you have, which you would like our financial gurus to address, and we'll be addressing them at the end of the session. I would now request Ms. Sowmia Gopinathan, Times Conferences Limited, to present the opening address.
Thank you, Sahil. Good evening, ladies and gentlemen. Welcome to Money Gurukul, an Economic Times initiative to empower through financial literacy. Financial literacy refers to the skill sets and the knowledge that allows an individual to make informed and effective decisions with all their financial resources. Unfortunately, India ranks amongst the least financially literate nations in the world, and what is most surprising is that this phenomena is not limited to rural areas alone, but to urban India as well. In fact, research has claimed that 1 in 4 employees in India suffer from serious financial distress, which certainly impacts their health and thus the professional productivity as well. Also, considering that an employee goes through all the life's major events during their work tenure, and with whether it's a home purchase, whether it's retirement planning or education of their children, or the family health, it's important for companies as well as individuals to provide education that can help make effective decisions. The Economic Times Money Gurukul Summit 2015 has been designed to help people and organizations connect with the gurus of markets and the financial markets who can help them plan their financial future better. Through these financial literacy forums, the Economic Times hopes to connect experts from various fields of finance with the Indian professionals and educate them about the basics of finance, clarify their doubts, and also myths on financial planning, savings, investments, and also help them make informed decisions with the various marketing tools and the investment tools available. Financial literacy is a structured process by which investors improve their understanding of financial markets, products, concepts, and risks. In fact, in the complex financial landscape, it becomes all the more important for consumers to have an improved access to the right information. Through this initiative called Money Gurukul, we at Economic Times are trying to do our bit in spreading the financial education and awareness, amongst which the people who would hopefully enable them to take informed decisions on their money matters. Please stay tuned and listen to the experts today. Thank you so much.
To begin our evening, I would like to introduce our first speaker, Mr. Jayashankar Nair, Deputy Vice President, PMS IIFL. Mr. Nair is a part of the fund management team at IIFL PMS and has been with the company for over 6 years. An MBA with over 12 years of experience in equity investment advisory, NDPMS, and equity research, Mr. Jayashankar has tracked various sectors as part of the NDPMS team in his previous assignment. Let's welcome him with a loud round of applause, please.
So let me just start off. All have been investing in the equity market. I will be covering the equity market and what we feel where the market is headed probably for in the coming months or the coming years, and where we see the markets as such. So let me just start off. We have all been investing in the market. Sorry? Yes. And how was it? I mean, past 1 year, if I can ask, how has the market treated us? Huh? Choppy or shocking? Okay. Fine, good to hear that. Okay, let me just ask one more thing. I mean, what is our expectation? Where do you see the markets going ahead? If I ask, are we bullish, are we bearish? Where do you see ourselves probably in next 1 year or 2 years? Sorry? Bearish, okay. Okay. And what is long term, sir? Okay, okay. Good to hear that. 10 years and above, that's good. Okay, the problem in India, typically what I feel is that, I mean, when I look at other asset class, typically probably a real estate or gold for that matter, we typically tend to do a lot of research, particularly in real estate for that matter. I mean, we tend to understand how the property price would be, what are the developments which is going to be there, and we spend a lot of time analyzing the asset class what we are investing. But when it comes to equity, what is that we tend to do? We typically rely on somebody else's advice for that matter. We tend to believe that what others are speaking, and typically it is a very small portion of our overall scheme of things. So we probably don't spend that kind of time and effort when it comes to equity. But when it comes to other asset class, probably we spend that kind of time and money. Let me just come back and try to put an analogy with cricket. I mean, who do you feel is the greatest cricketer all time, batsman all time ever? Probably Sachin Tendulkar? Sorry? Okay, Donald Bradman. Fine, I mean, but any idea how many runs Sachin Tendulkar has scored over his career in Test cricket, broadly? A rough figure. No, sir. Sorry? Yeah, very close. It is close to 15,200 runs what Sachin Tendulkar has scored over his Test. Any idea how many balls he has faced to score that many runs in Test cricket? It is close to 30,000 balls. What I'm trying to say is that, I mean, more than 75% of the balls, or more than 70% of the balls, what Sachin has faced over his career, he had actually left the balls. And it's only 25% of the time what he has actually hit 4 runs. So typically, the market also behaves similarly, in the sense that it need not be that every ball need to be blockbuster. Every ball you need to hit for a 6 or a 4. So similarly, in market also we need to be patient. It is not about how you time the market as such. It is more about being in the market and staying in the market. That will actually make us more money rather than trying to time every time. So what we typically tend to do is that we tend to look at market more from a shorter term horizon. We feel that every year should be a blockbuster year. Every year we need to get a X amount of return, which is not true. Typically the returns in the market are not linear. It is more from there would be volatility in the market, but only thing is that how we actually relate to that volatility, how we treat that volatility. So if you are able to face that volatility, probably we will tend to make money in the market over a period. Somebody told 3 years, somebody told 10 years. Honestly speaking, I mean, that's something which depends on what kind of investments we have done in the market as such, and what is our risk appetite in the market. Typically what we tend to do is that we always tend to look at the next blockbuster. We always tend to look at the next Infosys. But we don't understand that in the quest for searching for the next Infosys, we always tend to find out there would be hundreds of HFCLs in the market. So in 1992, somebody told you that Infosys is going to be a blockbuster, or in the sense that it was going to be a multi-bagger over a period of next 10 years or so. How many of us would have actually believed it? I mean, live about believing. Did we ever understanding outsourcing as an industry at that point in time? Or did we know the promoters, Narayan Murthy, that point in time? So in the quest of searching that kind of an idea or the stock ideas, the problem is that we actually tend not to understand the risk which is associated, the risk of the unknown. So market is always there with the risk of the unknown. So if we understand that aspect and have our risk profiling correct, and if we are looking for that kind of a multi-bagger, probably we should feel that that's the money which probably will not yield us the required return, or probably there could be a capital loss. So but on the other hand, if you look at a steady state kind of a company, for example, the company which has already been discovered, which is already there, which has been growing at probably a 10%, 15%, or a 20% consistent growth. Say, I mean, Infosys, say in 2004. The story is known, the ideas are known. SDFC, probably in past decade or so. Thing is that, I mean, if there is a stock or an idea which is already discovered, probably it will give you a consistent return. But if you look for the discovery, you will probably end up losing your capital also. What I'm trying to say is that we should always understand the risk profile of ours, how much money we are willing to lose before looking for such kind of an idea. So that is very important. So what we believe is that at this point in time, keep the faith. The market is going to be here. It is not going to be down or out for a very long time for that matter. The market has seen a lot of events in the past also. But if you look at, say, since 1980s, over a period of past 25 years or so, the market has consistently given a return of somewhere around 15 to 16% on a CAGR basis. So is it a bad return? Is it a bad return by any standard? No, it is not a bad return. Only thing is that our expectations probably would be to make that 40% or 50% on every investment what we make, which may not hold true as such over a period. So if we understand the volatility in the market and we understand the risk profiling, probably market is the place to be in and manage our expectations. See, what has happened in past 1 year, when we started off the year last year, the expectation was that the earnings would probably grow at an 18 to 20% kind of a growth. Last year, that is FY 15 March ended, the Nifty earnings were close to 386 rupees. Now the expectation was that probably the earnings will grow at somewhere around 18 to 20%. At the end of the September quarter, what we actually realized was that the earnings growth has been hardly in the range of 3.5%. I mean, the results what we are seeing as of now, the December quarter numbers what we are seeing, at least as of now, the net profit has actually grown up by somewhere around 10% overall. The sales, there has been a degrowth. But what I'm trying to say is that the expectations were pretty high at the start of the year. Now, market is actually tending to adjust to that expectation. Now, if you ask me today, the expectations are pretty low, in the sense that market is probably expecting a 8 to 10% kind of a growth for the next year. So if there is surprise on the positive side, probably market will react on the upper side. If there is a surprise on the negative, the market will probably correct further. At the end of the day, earnings is the key. Market at the end of the day works on the earnings more than anything else. So why we feel that the Indian equities should probably do well, or probably India is the better place to be in at this point in time. If you look at India is actually a bright spot among the fragile backdrop across the world, across the globe. If you look at most of the emerging market economy, including China, Brazil, Russia, these are all impacted by one or the other reason. China probably because of the overheating which has been done, which was there for past 2 decades or so. Brazil and Russia probably for the commodity economy what was there. Most of the Middle East economy which is dependent on crude, again a commodity. So most of the global market, if you look at, there is some or other kind of problem. Within that problem, India actually looks as a bright spot. So if you look at India, probably at this point in time, is the fastest growing economy in the world at close to 7.5 to 7.6%. And we expect probably this kind of a growth, probably in the range of that 6.5 to 7.5 or 8% to continue for probably next 5 years or so, or probably longer. Why we are so confident is that it's not the first time such an event is happening. If you look at India today, probably India is what US was in probably 1920s, 1930s, or probably Japan was in 1950s. So if you look at the demography, if you look at the demand environment, what is there, probably we are at the start of probably a major bull run which is yet to follow. If you look at the per capita GDP, I mean, any idea what is the GDP of India broadly? Yeah, it is $2 trillion, $2.18 trillion economy at this point in time. Any idea what is China's GDP? Broadly, it is close to $10 trillion economy at this point in time. And US is probably a $17 trillion economy at this point in time. Now, if you look at in 1980, when we started off, India and China probably started a similar kind of a GDP. It is only over the past 2 decades that China has significantly overtaken this in terms of GDP growth. So, probably going forward, I mean, if you look at the macros, and if you look at the fundamentals of this country, particularly in terms of demographic dividend, or in terms of demand, or in terms of democracy, we find that probably India is in that sweet spot probably for next 10, 15, 20 years. So that's what gives us hope in terms of to be participating in the Indian equities or India as an asset class for that matter. The infusion was to the tune of close to $72,000, so which is significantly higher, which was the highest what we have seen over the years. So it's the domestic consumption and demography which is the driving force in the Indian market, and which we believe should continue at least for next 5, 10, 15 years or so. So only thing is that whether we participate or not is a choice what we have. But in spite of this 7% kind of a growth, we still find that the market penetration in India is pretty low in terms of most of the commodity what we consume. If you look at the per capita consumption of steel, it is only 57 kilograms, which is close to 516 for Japan, which is close to 515 for kilograms for China. So what we see that most of the commodities what we look into, or most of the consumption pattern if we look into, India is at the lowest step at this point in time. Even in terms of per capita GDP, India ranks at a low $1,618 when compared to probably $6,000 for China. In fact, most of the countries like sub-Saharan countries, or even war-torn countries like Iraq, has much higher per capita GDP compared to India. So what I'm trying to say is that it's not that India may be may go into a rich country bracket in the next 5 years or so. But even from the low income group, even if we go to the middle income group, say $3,500 or $4,000 per capita GDP, that itself is a significant opportunity for a country like India. And that's an opportunity which is there in a developing country like India. So only thing is that how we participate, how we make the best use of it is something which we need to look into. There is the historic election mandate. I mean, I'll not go too much into it, but the majority after 30 years. So there is a stable government which would be there for next 3 years, and probably that will give a impetus to the policy of the government. So when we speak to most of the market participants, or even industry for that matter, we feel that there is some amount of disillusionment at this point in time. People feel that things are not happening the way it should have happened. But when we actually went and met people in Delhi, when we actually looked into some of the aspects, what we realized was that the measures taken were small, but it was very significant, which would actually probably lay out the map for India for probably for a longer term rather than for a shorter term. Policy actions like transparent auctioning of coal blocks, ease of doing business, like faster clearances, the inflation monitoring policies. So if you look at most of the policies which the government has taken, which is setting up the base for a longer term rather than looking anything from a shorter term perspective. But we are seeing some amount of green shoots, particularly when I see the CV cycle, which is actually showing a significant uptick, at least in the for past 9 months. Initially, we thought it is just a blip, but now it's actually showing that apart from the replacement demand, there is a fresh consumption, there is a fresh demand which is happening, particularly from the road infrastructure side. The road construction has actually improved from 2.53 kilometers a day to probably 17 kilometers at this point in time, and it is likely to improve to probably 28 or 30 kilometers a day going forward. So what we are seeing is that there's some amount of green shoots which we are seeing in the economy. The fiscal deficit and the current account deficit, which are the two pain points for India, is actually showing significant moderation, and we are seeing a revival in the auto sale growth. Coal production has improved. So there are a lot of positives what we are seeing, the green shoots, the initial revival signals what we are seeing in the economy. But only thing is that the translation of that into the earnings is not yet visible. Probably it will take another 2 or 3 quarters more. Probably that's more of an aberration at this point in time. But broadly what we look at that we are looking at a scenario where we will look at a lower interest rate rather than a high interest rate scenario going forward. Now, what does it mean? It means that a lot of companies where there could be a significant financial leverage. I mean, there is a company which I was looking into. The balance sheet of the company had a 20,000 crore kind of debt with a profitable PAT figure of somewhere around 250 to 260 crores. And just imagine a 1% or 100 bips correction on the interest rate. The entire impact of that would be on the PBT level. So that would be close to what? 200 crores on the PBT level. So what I'm trying to say is that because the low interest rate scenario, there would be a lot of companies which would benefit inflation, which was forming and inching up. It is declining. It is showing a declining trend at this point in time. The interest rate which was rising, it is moderating. It started softening. The system liquidity, which was very tight, it is actually abundant at this point in time, or rather pretty reasonably available. The current account deficit and fiscal deficit, which was uncomfortably high, is substantially reduced. I mean, part of it has to do with the crude price coming down. The currency, which was weak and volatile, will stabilize, and probably we would see a gradual increase in the currency rates rather than a fast, significant deterioration on that. The sovereign rating India was on a downward bias. Now there is an upgrade on the outlook. Policy reforms, which there was a chaos and paralysis which was persisting. Some amount of policy action has started. So investment cycle which was frozen, we are seeing on the verge of revival, at least on the public sector investment, probably not on the private sector. And the banking asset quality, which was deteriorating, it is stabilizing. I was recently going through most of the numbers. Today ICICI came with the numbers. Pretty disappointing in terms of the asset quality. But if you look at most of the banks like your Axis or IndusInd Bank, and on the private sector space, we are seeing some amount of stability which is coming there. So over a period of 18 months, what we are seeing is that 18 months back, probably most of the aspects were in the red on the right hand side. Now that is actually showing to green, at least showing some amount of stability there. Now if you look at the Indian equity market or the Indian equity market cap, any idea what is market cap? Broadly? Sorry? What is market cap? Yeah, it is theoretically the amount of money. If you have that kind of amount, you can probably buy out that company for that matter. So that is the market cap. So if you look at the India's market cap, is currently after the downside, it is close to 1.45 to 1.5 trillion dollar. Now if you look at our GDP, it is close to 2.18 trillion dollar. So what I'm trying to say is that probably we are trading at a discount to the price to book. I mean, if India is a company, probably you can put it that way. Any other emerging market. For example, in India, if you look at the Indian equities, you have a platter: banks, FMCGs, your automobile, infrastructure, oil and gas, IT. But if you look at across the spread, you can have your own spread for that matter. But if you look at other emerging market, for example, Russia, it is typically your oil and gas. If you look at China, it was typically your manufacturing infrastructure. If you look at Brazil, it was typically your commodities and agriculture products. So what I'm trying to say is that the Indian equities provide you a much larger basket to choose from, which is very unique. It is very deep. Has started to outperform other asset class compared to probably gold and real estate. It is only in past 2 years there's some amount of traction what we have seen. If you look at a 6 years kind of a data, equity has still been underperforming, but over a period, probably we feel that equity should come back to the base level, and probably you can see a better returns from the capital market, equity market. So I will I'll not go through the individual stocks and ideas for that matter, because but probably we can, that's something which can be discussed as such. So broadly what I feel is that, yes, this is a market to be in. It's only a matter of time what we look at probably from a 2 years or 3 years perspective. What we expect is that the 386 earnings on the Nifty, the EPS of Nifty, which would end up at somewhere around 405 to 410 for the current year. For the next year, we are having an expectation of somewhere around 435 to 440. We are expecting at least a 12% kind of a growth of on the Nifty earnings. So we feel that we should continue to get that 15 to 16 times kind of a multiple for the next year or so. And next year, when we see most of the macros actually impacting the bottom line, or on bottom line of the companies, that's where we probably will see we get back to the trajectory of 2004 to 2006, where we probably see 18 to 20% kind of a growth on the Nifty earnings. So probably at a 16 to 17 times kind of a multiple, probably we should be in a much better position compared to what we are at this point in time. Thank you.
So thank you so much, sir. Thanks for cooperating with us. Before I move on to our next session, I would just like to inform you all that we're distributing the question slips. So any queries, questions that you want to ask our financial gurus, you can make a note of these question slips. We'll be collecting these back from you at the end of the last session, and the same will be addressed by our expert panel. Moving on, we all know and witness on an everyday basis how technology is evolving and changing our lifestyle by great bounds. Our next speaker will tell us how technology can enable an investor-centric approach. Our next speaker for the evening is Mr. Bandam Srinivas. He presently heads the zonal office of National Securities Depository Limited at Chennai and has been associated with NSDL since 2000. Earlier, he worked with Global Trust Bank Limited, Delhi Investment Banking Division, and Karvi Consultants Limited as quality representative for ISO 9001 quality initiatives, implementation, and certification audits and compliance for Reliance Unit at Mumbai and Hyderabad. Let's welcome him with a huge round of applause, please.
A very warm good evening, ladies and gentlemen. It's a privilege to be part of this financial literacy initiative by Economic Times Money Gurukul. You will get to know through these sessions why financial planning is essential in one's life, and what are the, what financial, one should have goals in life, and how to achieve these goals you need finances, and how to make investments out of your investable funds to achieve these goals is all part of this session's, information dissemination. So having said this, when you take a decision that when you want to make investments in the market, everybody does it at some point in time in one's life. But when you come to that stage, when you want to make investments in the market, there are different products, different services which are available to you in the markets. And in the recent past, more so from the economic reforms initiated in our country, there are a lot of changes which have happened in the Indian capital markets. And one of the important aspects of the Indian capital markets is the technology. Technology has played a major role in transforming the Indian capital markets, the way we do transactions today in the markets. So it has actually enabled investors a very convenient and user-friendly features to participate in the markets. So with that perspective, we have thought we'll share from the NSDL's point what products we have developed in this context. So just one second. Sorry, excuse me. So just to begin with, I would like to know from the audience how many of you have Demat accounts, just to have an understanding. Fine, thank you. Fairly, most of you have opened the Demat accounts, so that becomes easier for me to communicate what exactly I would like to tell you about the depository system in India and what changes we have brought in the recent past. Now, as you all know, a depository is something similar to a bank. In a bank, we keep our funds in a bank account, and whenever we have the requirement, we withdraw them or do the transfers. Similarly, in a Demat account, you hold your shares in the electronic form, and whenever you have the need to transfer them or sell them in the market, you do it. So technically, when you want to make some investments in the market, you need to open a trading account, which you open through a stockbroker to buy and sell securities. And to what trade you have done through the stockbroker, you need 2 more accounts to settle those trades. For example, if you have bought 100 shares of an ABC company, to take the delivery of those shares, you need a Demat account. That Demat account is opened with an entity called depository participant. And to do the fund settlement of that transaction, you need a bank account. So technically, you need 3 accounts to buy or sell any security in the capital markets today. That is a Demat account, trading account, and a bank account. There are entities who provide all these 3 types of services to the end user. So actually, as I said, NSDL is the first and the largest depository. It started its operations in 1996, 272 DPs. Through these depository services branch network, you are able to avail these services. Many of them are also present in Kochi. So through these services are offered to the investors. So the first point of contact for you to open a Demat account or avail the service is the depository participant. So NSDL is the depository, and depository participants are various entities like banks, stockbrokers, institutions. They act as depository participants, and they provide you the Demat services. Now, these services are offered from more than 1,900 cities and towns. And as I said, there are 272 depository participants. And most importantly, the value of the assets which we hold in our system is about 119 lakh crore. 119 lakh crore is the value of the asset information which we store in our NSDL's depository system. And this asset information belongs to the citizens of the country who have opened their Demat accounts. Now, this asset information is only belonging to only 1.42 crore investors. And what is the population of our country? It's about 120 crore. So hardly a small percentage of the population make investments in the capital markets, and all this asset belongs to those citizens. So the market potential for larger financial inclusion of the citizens to participate in the capital markets is immense and very huge. So it's a long road ahead. Of course, it all depends on various factors in the country also. So it is a very long journey, but having said that, there is a lot of potential for the, citizens to participate in the growth of the economic growth of the country. So that reflects that number. It's a very important statistics, which actually, when we crossed the 100 lakh crore mark, a couple of months back, we had actually crossed an important milestone in the Indian capital market, and which we had celebrated in Bombay also, in the august presence of Honorable Finance Minister Shri Arun Jaitley. So that was something we thought we'll share with you. Now, as I said to you, NSDL as a depository has been in forefront in developing technology-based products to enable the end users experience of making use of that product more convenient and user-friendly. With that objective, we have actually developed these products. One of them is the Speedy. Now, this Speedy is a common internet-based facility developed by NSDL. Through this facility, investor who has opened his Demat account can submit his delivery instruction slip, or rather he can transfer his shares from his Demat account to any other Demat account through internet, without the need of filling a physical delivery instruction slip, going to DP's office and submitting that delivery instruction slip. So through internet, at your convenience, sitting at your home or your office or across anywhere in the world through internet, you'll be able to submit your delivery instruction slip. So we have tried to eliminate the physical paper which was getting created in the system in the form of a delivery instruction slip. So it becomes very convenient for you. So to avail this facility, you can get registered through a depository participant and make use of the facility. Similarly, the other facility what we have developed is the Ideas. It is again simple and easy to access your Demat account through internet. You can log in through internet with user ID and password to your Demat account and see all transactions that have taken place in your Demat account, and also download a transaction statement from the NSDL system. You can in fact actually download a monthly transaction statement from this facility, which is digitally signed by NSDL. So again, it's a very convenient and user-friendly feature which is available to you through internet. You'll be able to access and see all transactions in your Demat account. How to register for this facility? Simple. Either you can do it through visiting your DP's office, or sitting at your home through internet also you can register for Ideas facility. Both ways you can do it and avail the facility. Similarly, to make it more convenient, we have also launched a mobile app. Now, what is the benefit of a mobile app? The benefit of mobile app is that on the go, on your handset, you'll be able to see what all transactions that have taken place in your Demat account. Again, it is a very effective tool of disseminating the information to the end user, that is the investor. So to keep you all informed what is happening in your Demat account, you can download this mobile app. It is a freely downloadable software, both on iOS and Android versions. You can download it, register for this facility by keying in your Demat account details and few more details it will ask you. Once you register for this facility with user ID and password, you can log in and see all your transactions. So one more user-friendly feature which is available to you. Now again, to avail this facility, your mobile number should be registered in your Demat account. Now, two important fields which you need to communicate to a depository participant as part of your account opening procedure is the email ID and the mobile number. So please communicate your correct email ID and mobile number in your Demat account, so that any value-added information or any important communication, whether it is communicated by your DP, by your company where you're holding your shares, or by NSDL to you, could be communicated through email or through mobile communication. That through an SMS or any important alert can also be received. In fact, little further in that is that when you have provided your mobile number in your Demat account and registered for an SMS alert facility, NSDL sends important alerts on your mobile number for all important transactions that take place in your Demat account. For example, if some debit has taken place in your Demat account, NSDL sends you a SMS alert on your mobile. So it is a very effective risk mitigation tool, so that it keeps you informed what is happening in your Demat account. What is required to be done? Just you need to share your mobile number with your depository participant. Now, one more important facility which has been recently developed is the consolidated account statement. In fact, this is something which was envisaged by the Honorable Finance Minister, again Arun Jaitley. In his finance budget speech, he has mentioned about the single operative Demat account. Now, what the policymakers are looking at is a single facility through which an individual will be able to see all his investments in all different financial products. Now, today, if you look at it, you have a bank account, you have a Demat account, you have bank FDs, you have insurance policies. Everything comes under different domains, and you need to keep track of all this differently. So government wants to come out with something called a single operative Demat account, through which you will be able to see all your financial products in a single statement or a single view. Now, how soon it will happen and how fast it will happen, it depends. Going forward it will happen, but because all these domains come under different regulators. Now, whatever products are and services which were under the domain of SEBI, SEBI has taken an initiative as a capital market regulator and instructed both the depositories to come out with a CAS statement, that is a consolidated account statement, to provide consolidated information of Demat account details of the individual and also his investments in the mutual funds which were held in the statement of account form. So today, when you receive a consolidated account statement from NSDL, every month, if you have done any transaction in the previous month, you would receive that. In the consolidated account statement, you will see all your multiple demat accounts, if all those accounts belong to one PAN number, and all your mutual fund investments, if those investments belong to that particular PAN number, because the consolidation happens on the PAN number of the individual. So all these products are consolidated and reflected to you in a single statement called as the consolidated account statement. I'm sure many of you must have received the consolidated account statement sent by NSDL, and in fact, we've been receiving feedback from the investors appreciating the initiative and the way we have presented that document to the investors. Now, this is a very important document because it gives you the ability to see all your investments in single page and single view. So it is very helpful for you to take any decision making in further investments, and it also acts as a benchmark reference point for all your future decisions. And it also helps you in maintenance of your portfolio composition and any other future investments you want to make. So it's a very important communication and development which has happened in the, in the recent past. So one more important aspect is that, as I said to you, there is also a facility for all of you to open an e-insurance account. Now again, e-insurance account comes under the different regulator, but today you can open an e-insurance account and hold all your insurance policies, life insurance policies in that electronic account. Now, if you have opened your e-account with NSDL, insurance repository, so even those policies and account details will be reflected in your cash statement. So that is the benefit of your cash statement, which is you are receiving from NSDL. You will have your all multiple demat accounts, also all your investments in the mutual funds, and also your policies which you are holding in the electronic form. Now just I'll show you, this is what is the format of the consolidated account statement. I'm sure many of you would have received this statement and seen this. It will actually give you a consolidated view of all the holdings. It